Good evening. A little bit of a disclaimer. I am an amateur. I've been fighting with this for quite a few years and learning lots of harsh lessons. This is charting only, and I'm not suggesting that you should risk money. However, I will explain my experience. I'm currently profitable, quite profitable, over time, and I figured out something that works for me. Trading typically is um, a lot about when you place the trade and where you place it in the price action. So you don't just shut your eyes and put a trade on. Often you'll put it on and you're better off waiting. And FOMO, you will get flogged. And if you don't trade with a stop loss, you might win here and there, save a few trades, but you'll eventually blow up your account, as I've experienced. The number one key thing I'll say is all that matters is what you will lose at stop loss. So if you let the price get to this point, like it did, based on a big VWAP from the top. VWAP is the average of the buying and selling volume. So that's the VWAP. Currently acting as a little bit of resistance, uh, plus Fibonacci from the top here to the bottom. Fibonacci golden 0.618. If you said, right, when it gets to that point, I will take a risk. I will put an order here. Well, technically, because it was going so hard because of the good news, you would wait. You wouldn't just ape straight in at that point. You might go RSI, which shows the strength or the momentum. So you might go, right, at this point, the strength pushed it to here. But this time, the same strength pushed it a lot harder, and go down the time frame. On the low time frame, say 1 hour or 30 minutes, you might be able to say, okay, when it did get to here, the next time it pushed up was lower. So it's running out of steam. And that's typically the best way to go about it. When it's just going hard in one direction, don't try and just quickly get in. Wait for it to sort of run out of steam, particularly if it's a news related pump. There's a thing called time weighted asset purchase, TWAP, and that's typically what is happening in the market these days. It's just a constant buying pressure, and any additional FOMO pressure or trading pressure just pushes it through all resistance. So that's one thing you can do is, I use Fibonacci. I'm starting to include this VWAP, anchored VWAP, and market structure as well. Like as you can see on the 4 hour now, we have a higher low, and then a high. So that's a 4 hour confirmed uptrend. One thing I've learned over the years is the higher time frame trends is the direction that you should be trading in. And I'll give credit to Craig Cobb here. His system, his checklist says it's a bonus factor if the trade is in direction of the daily trend. This is a typical what the people who trade the patterns would say is a head and shoulders. But the reason it's not confirmed trend reversal or head and shoulders until it breaks the low is that it's a lower high, higher high, lower high, and that wasn't a confirmed head and shoulders, which I would call it a potential trend reversal if it did make a new low. All right. So another thing you can do if you're starting out, one thing you should do is not use money or use a small amount that you're not going to get angry about losing, because if you have say 3 losses in a row and you have to stop or quit, you haven't actually tested your strategy or your skills, because it's only 2 data points to measure against. And so what I would say is start off by backtesting. As you can see here, so I'll first say low time frames are more risky. They occur a lot quicker and they're not as strong as higher time frames in terms of support and resistance. But here we can see from the top to the bottom, it went to 0.618 and flushed. And then again, just now it went from top to bottom. Again, it's in that range. The RSI still made a lower low on this 30-minute, which is not that significant. It has breached above the average, and I'm observing lately when it does breach above this average line, it tends to use it as support and pumps. And this potentially goes to one of the famous Australian traders, ASX trader, has said that majority of the volume are bots. And so bots are just reading technical analysis and just, there's a consensus among bots that when it does that, potentially it's good to go for higher. All right, so what I would say is backtest. So if it's done, where is it, 4 hour? If it's done something like this, you could go back and say, why has it done something like that? And so going back to do a backtesting, why has it done something like that? So from a large time frame perspective, we'll start there and work our way down. It's typically the best way to go from the top. So yeah, when I trade, I will look at the daily to get a bias. I'll also follow a fair few people. I don't follow them like a sheep, but if they have a directional bias or a particular support, I'll definitely consider that. Sometimes you can get an overload and there's conflicting analysis, but typically, so Craig Cobb, there's another Craig, a few YouTubers, but you need to stay in the game. You need to keep your head in the market, and that's why you should start with no money and back test your strategies, see which ones work better for you, observe people, and then eventually do money. But like I said, if you do money, you got $100 to you're happy to lose $100, you would say, right, $5 of risk at stop loss per trade. Let's see how we do. And because you really want to let those winners hit your TP. If you take them before a 1-to-1, that's a $5 risk to $5 reward. If you take it before a 1-to-1, you need greater than 50% to break even. So you really need to hit those 1-to-1s at a minimum. And as you get better, fair value gaps and order blocks will allow you to hit greater RR. But I've got about an 80% win rate at 1-to-1. And depending where I'm at in my profit and loss, if I'm up heaps, I'll let it run. And if it round trips, it's okay. I'm not as could say upset, but that's not supposed to use emotions in this game. You need to be able to take a hit or a few hits in a row and not even blink and just go, okay, let's wait for the next setup. Because yeah, you're going to have losses, and I've heard a few professional traders say in the rules, the best traders know how to lose, and because that's an essential part of the game, losing. And so people who don't use a stop loss, people who don't really use risk management properly, so they risk half of their account, those people are the ones who are essentially paying the good traders who know how to do it properly, stay in the game, play a large data set, because it is a zero-sum game, money in, money out. There's no real value creation in this game, so the losers are paying the winners. The reason I choose crypto is because it adheres to the technical analysis the best. I haven't really looked at other markets. It is something I want to look at because, more legitimate markets, for longevity, I want to be doing this for the rest of my life, extracting money from the market. But crypto tends to adhere to the technical analysis rules, support and resistance, etc., a lot better than other markets. And the volatility is what makes it so profitable. Like if Bitcoin didn't move much, it might not be as exciting, but it can go up 5%. That's a rarity, 5%. 10% is huge. It's really rare, but it's happened. Down or up 10% variance. But typically like a 2% up will jack up these other ones by a fair amount. We're in a bear market at the moment, so not as much, but when it's in a bull market, if Bitcoin goes up 2 or 3%, the other ones can really get going. And so that's why I'm hyper focused on this at the moment. The crypto space has released derivatives for normal markets. So a lot of us now are trading gold and silver and oil. So Oil is like a quite fundamental, based on fundamentals at the moment, geopolitical events. So there has been a bit of um, de-escalation, um, like on a really sort of weird scale where there's no real peace deal, but that's what sort of the president of the United States is sort of trying to bring oil below 100. He is sensitive to economic performance, and unlike other wars, Iran really has a choke point that can bring down the global economy. And look, why wouldn't they? If my country was being attacked and I loved the government, I would say yes, let's take everyone down with us. Um, so I've decided that this double bottom, this golden pocket, on a low time frame, there was also divergence. So it went low, and then when it went low again, it's sort of a divergence there. On the lower 30 minute, it was better. Yeah, that's better. Um, Definitely the momentum stopped there at that point. $87 down like 12%. The market went, no, here's a good range to grab it, and yeah, so that could go up and back to the top, which would be a one risk unit to two reward units. I could set the stop to break even now. It's it's likely that it would just come down and take me out. Um, but it depends, as I said, it depends where you are in your profit and loss. And at the moment, that could hit stop loss, and I wouldn't blink because I've won quite a few trades over the last 2 weeks. That's it for now. Just a bit of thoughts. Yeah, reply in the comments if you've got any questions or counter ideas. Thanks for listening.